Hi there, and welcome to another episode of The People of Private Capital with me, Ferdy Roberts. I'm the CEO and founder of Asset Class. We're a provider of front, middle, and back office solutions to the private equity, venture capital, and broader private capital space. So, whether you're looking at fundraising, managing your investors more effectively, providing them with a full feature LP portal on the back end, or indeed managing your deal flow or portfolio management, please come and talk to us. We'd be delighted to help. Today, I'm speaking with James McDowall. James is a founding partner at Arcanum Capital. Arcanum Capital are focused on the broader Web3 crypto space, typically investing in the seed, very early stage investors. And today, I speak with James about his journey into that space, coming from a professional sports background, having participated in the PGA for about 7 years in both the UK and in Zurich, Switzerland, moving then into the venture capital space and his focus on blockchain and everything Web3. It's a really interesting conversation. I hope you enjoy it. And with that, let's dive into this week's episode of The People of Private Capital. Okay, James. Well, welcome to the podcast. It's a real pleasure to have you here. I know we tried on a couple of occasions between your international travel and various other things. We didn't make it happen, but delighted to have you here this morning. And welcome to the People of Private Capital.
Thanks very much for having me, Ferdy, and appreciate your patience.
No problem at all. No problem at all. So, James, as I said in the introduction, there, you're founding partner at Arcanum Capital, and just for our listeners, can you give a brief introduction to the firm and perhaps your area of focus?
Yeah, so Arcanum Capital was incepted in the year 2020, so we've been around for about 4 years now, and we typically invest in early stage Web3, blockchain and digital assets startups. So pre-seed and seed stage. Sometimes even the first check-in. We sometimes we like being first check-in if it's a strong founder we've worked with in the past, or a strong introduction to a good team. We're happy to sort of lead.
Yeah, well, there's certainly a tremendous amount happening there right now. We might delve into that here in a few moments. But just before we delve into, let's say, some of the sample portcos that you're backing, perhaps your investment thesis, a little bit about yourself. So, doing the background, you've got a pretty varied history here, or should I say, moving from the sports world into venture capital. Some might say there's a lot of direct comparisons in terms of the competitiveness and the endurance that's required, and perhaps the diligence that you've got to put into to honing your craft. But interested to understand a little bit about your journey, and maybe perhaps we could pick up from your college days, or maybe even prior to that, anything that might have influenced your movement into the sports world first of all, and then perhaps take the story from there.
Mm-hmm. Good. Yeah, so it has been a big career change. I was a golf pro before now. That sort of came to an end in 2017, 2018. So we go back to sort of school days. I guess at that age, it's quite common that you don't really know what you want to do, right? And I found golf when I was maybe 14, 15 years old, and quickly became, it's something that I wanted to do all the time, and my parents were quite good at getting me to try different things, and I was playing tennis at the time, musical instruments, tried a lot, and just most of the time I just didn't apply myself. It never really grabbed me, and I didn't practice enough. And then golf came along, and I became really sort of obsessed with it, and I wanted to play every day. It's all I wanted to do. As soon as I finished school, I wanted to go to the golf course, and you got a little bit addicted. So fast forward a few years to sort of coming out. I did do what we call A levels in the UK. So I didn't go off to college and do an apprenticeship. I stayed on at school and did an extra couple of years. studied English, history, psychology,
Right.
and politics. They seemed sort of the most
Hmm.
interesting to me at the time. And then when you finish that, it's a question of what do you do? Do you go straight into, carry on education, go to university? Um, and there were quite a lot of people who sort of took a year out to, find themselves
Yeah.
or figure out what the hell they want to do,
Gap
or what they
year.
want to study. And at the time, all I wanted to do was play golf. And I thought by this point I had a shot at turning pro. I was improving rapidly. I won the most improved junior at the club
Right.
in that year. And so I took a year out and I worked at a golf course, and I played golf pretty much every day, and I practiced, until my
Yeah.
hands got very sore, um, and ended up turning pro at the age of 19, and went to work
Hmm.
at a different golf club, and quickly found out that professional golf is extremely competitive. I think starting at the age of 14, 15, I was always
Hmm.
playing catch up. Um, Coaching is something that is quite heavily pushed once you turn pro and you do your sort of PGA
Right.
qualifications. Um, so I did all the coaching qualifications, and coaching is something that
Right.
I really enjoyed. Um, I I figured out I wasn't good enough to play for a living. It's ultra competitive. And I played in some professional tournaments around the region, and even abroad, a few pro-ams and things, which I enjoyed. But I wasn't going to make it
Right.
as a player. So I went down the coaching route, and I then moved again to a driving range, probably the best one in the region, one
Hmm.
of the best in the region. And my coaching diary became full very quickly, and I developed personal skills and became one of the most popular coaches in the region. I would say I was completely
Yeah.
full diary. Um, and then I sort of felt like I was maxing out there. My diary was full.
Right.
Where'd you go from there? And there was another British pro, who was a friend of a friend, and he'd been out in Switzerland
Hmm.
for many years. Um, and he happened to be back visiting friends and family at Christmas one time, and I um, I got to know him, and he said he might be
Right.
looking for someone to go and work out there with him. And it was good timing for me because I was at that age and that stage in my life where I wanted to broaden my horizons and look for other opportunities. I didn't want to just be in Derbyshire coaching
Yeah.
golf for the rest of my life. And then that happened. I got a call off him or a message one day, and he said, "Yep, I mentioned it, and we now definitely need someone. Come out and take a look." And then it all happened very quickly. It was a case of sort of go out there 2, 3 days, stayed with him, and he needed an
Right.
answer by the Monday.
No
We
pressure.
started to look at where I was going to live and
Yeah.
everything. It was like, yeah. And I did it. I just come out of a relationship, and it was a
Yeah.
great opportunity. And I knew I was going to meet some very interesting people. And
Yeah.
so I did it. So that was, what year was that? That must have been
Right.
2017. So I was 27 by that point. So I'd done a few years as a pro and sort of a lot of
Yeah.
experience. So I moved out to Switzerland, and I moved to an amazing place called Engelberg, which is a mountain
Right.
resort in the Alps, and absolutely stunning. And I was working at three different courses. There's Engelberg Golf Course, and there's a big resort owned by, I think, a
Right.
Qatari family. Like they put like $1 billion into it. It was
Yeah.
really prestigious. And so that was very interesting. It's called the Bergenstock Resort, overlooking Lake
Beautiful.
Lucerne. And there was another sort of beginner course down the
Mm.
road. And I quickly picked up some very interesting clients. I actually got probably Switzerland's biggest pop star as a client, and it sort of taught him and his whole family to play golf, and they were spending a
Yeah.
lot of time with me. I would travel with them. I'd go to America with them
Right.
and play golf with them. And there was actually a royal
Hmm. Yeah.
family as well, which, yeah, they were a very interesting client as well,
Yeah.
without going
Yeah.
into details. So with these two sort of major clients, I was spending a lot of time with them, and I was
Hmm.
earning decent money, and I didn't really
Mm.
know what to do with it, and so um, I became very interested
Right.
in investing,
Just as an angel
because
investor
again,
or
the golf side,
in your own right?
Um, yes, not
Hmm.
at that level
Right.
at the start. I was looking, rather than having this money sat in the bank or, spending it on
Yep.
rubbish that I didn't need, I
Right.
wanted to invest it. And stocks didn't really excite me because that just seemed like what everyone did, and they didn't seem, although in hindsight there was, they didn't see much value there at the time. I wanted something cutting edge, and I found
Yeah.
Bitcoin and Ethereum, and that was turned out to be good timing. It seemed like a very interesting
So this
emerging
was
technology.
2018, kind of
Um,
2019. That kind of thing. Yeah.
yeah, I think Bitcoin was at maybe I think 16 or
Wow.
$1,800, and Ethereum was down at like
Yeah.
two
Yeah.
or four
Early days
hundred.
for Ethereum, right?
So
Yeah.
it was um,
Mm.
it was early, and then the 12 months after sort of putting money into those were crazy. We got that whole euphoria
Yeah.
bubble, like tulip mania. Um, so I made some good money there. I started to look down at lower market cap
Yeah.
opportunities as well. And that is when I found myself wanting to help the teams, help the projects, do advisory and consultancy. And I was meeting a lot of very, very technically
Hmm.
amazing geniuses who were struggling to bridge the gap between their technology and
Right.
normal people and communities and
Yeah.
consumers. And so I found myself thinking, these guys are incredible. The technology is incredible. This is a real use case. But they're missing here. Maybe the website looks terrible, or maybe they're struggling to, just do like
Yeah.
basic marketing. Um, and so I started to do that, and then I met my
Hmm.
now partners that I set Arcanum up with.
Yeah.
There was four of us initially, and we were sort of incubating projects together, investing together, and helping teams, working with teams. And after a while, by sort of 2020, we realized that we were doing what all good
Hmm.
VCs do: investing early, communicating with the teams, helping them, making
Yeah.
introductions, um, helping them onboard validators, creating partnerships, helping with marketing strategy,
Yeah.
branding, all of this stuff. Um, and by this time, I was out of golf. I did well enough with the initial investments in 2017 to not have to give
Yeah.
golf lessons anymore, which was nice. And I could really throw myself into
Yeah.
this industry. Um, I spent a lot of time traveling, going to conferences, and meeting sort of the biggest and brightest names in the space and learning from them and building a really strong
Yeah.
network. Um, I also, during that time, I lost a lot of money, which I think is very important for all investors to do, because when you make a lot of money initially, it is luck, and you you get addicted to the
Hmm.
rewards, and you also
Right.
think you're a genius. When in hindsight, you realize a lot of it was luck. You had no idea about
Hmm.
market cycles, and the psychology in the market cycles, which is very important. And so there were a couple of hard years where I never took my eye off the ball, but I financially was
Mm. Yeah.
ruined again. That there was one point where I was all invested in one project, which again is a massive
Yeah.
lesson, right? You never put all your eggs in one basket. It basically
Mm.
became illiquid, and I was having to
All
borrow
right.
money for rent. And it's like one of these stories that you hear, and
Yeah.
it's a bit cliche, but yeah, it happened, and it was a little bit scary. I could always go home to England and live
Sure.
with my mum and dad, but you think, oh God, I've made all this money and I've all got all this experience now, but
Yeah.
I'm broke again. So, but they were valuable lessons, absolutely invaluable, really. Like, it really teaches you about the market sentiment and the mistakes not to make going forward,
Yeah.
diversification. And I also had to get a job, which was a blessing in disguise, because I went and did a period with an asset
All right.
manager in Zurich, um,
Hmm.
Tavis Digital, which was a sort of spin off from
Right.
Tavis Capital. I think at the time they were managing about 1 to 1.5 billion francs of
Right.
pension fund money. So very, very strong institutional finance. And they quickly whipped me into shape. They say this is not the real world. This is how we do things, and I had to deal with like really top tier Swiss
Yeah.
service providers. And I helped them structure some financial products in crypto because I understood the technology, the emerging sort of trends, and we launched some products with them, and that was really bridged the gap between this crazy Wild West crypto world and proper
Yeah.
institutional
And
finance.
you weren't tempted
Um,
to lean on the golf again as an easier way to make money in the post you're getting your feet burned.
Almost,
Yeah.
almost. It was tempting to go back to coaching, and honestly, I did try. There was
Hmm.
one place who were looking for a pro, and I thought,
Slot in
I
there.
could
Yeah.
just go back and go back to that. But I didn't. I saw it through, and I started working with this asset manager. And like I say, that was one of the best things I did. I also studied Kaya, Chartered Alternative
Right.
Investment Analysis. It's a charter in
Yeah.
finance,
Yeah.
like the CFA, the
Yeah.
Chartered Financial Analyst. And I did Kaya because I was certainly in alternative assets rather than the traditional
Yeah.
stocks and bonds and stuff. Um, digital assets and Web3 and all these sort of early stage investments fell
Yeah.
into alternative assets. So that was good. And that was, all about portfolio management and diversification and properly managing a portfolio, which I applied to the
Yeah.
Tavis digital stuff. And so after all of this, all this experience making money, losing money, managing my own assets, managing assets for this proper asset manager, I then felt ready with my partners and what we'd done in the past to launch
Yeah.
Arcanum Capital.
And
So quite a
yeah,
crazy journey,
yeah.
really.
So that discipline of portfolio management, kind of reverse engineering that to I'm assuming help influence your decision making now as you look at potential investments and spreading that risk. And
Mm-hmm.
you're quite right. I mean, I mean it is cliched. Anybody who achieves any kind of success has normally a series of failures, not just one, but a number of
Mm-hmm.
them that help hone the skills. I mean, it's no different, I guess, to, I'm sure you could draw your own golf analogies to it, but that,
Mm-hmm.
those changes that you're making, realizing, well, that's not working. I won't do that again.
Mm-hmm.
It is cliched, but you do learn so much from those failures. Um, and
Yeah.
it's challenging, I think, at a time, if you're in your, mid 20s, late 20s, even, um, that's a tough time to kind of swallow your pride and say like I failed, you know. But in a sense, that also gives
Yeah.
you the energy that you need to take that next step and move forward. So how did you cross paths then with your fellow founders of Arcanum? How did that come about?
Yeah. So two of them went to
Okay.
Draper University,
Yeah.
as in Tim Draper. Lucky enough to have Tim Draper as an LP in
Wow.
the first fund, actually.
That's a
So
pretty
that
good
that
thumbs
was
up. Yeah.
really, really cool. Yeah, so Raoul and Lu Chang. Lu Chang is between Beijing
Hmm.
and the Bay Area in the States, and Raoul is between. He grew up
Right.
in the States, but his parents are from India, and he
Hmm.
resides in India now. So very globally
Yeah.
distributed team. But I met them just through. I met Raoul. We were some of the first people in the Cosmos ecosystem, helping teams there. So projects like Comdex and Persistence and Sentinel, and we were, helping teams that were sort of the first there in the early days building in the
Right.
Cosmos ecosystem. Um, Cosmos is very interesting because it's like an
Right.
internet of blockchains and they can all communicate with each other and you can do like cross-chain transactions. And this was really cutting edge stuff back in
Yeah.
2018 because you've got the sort of monolithic blockchains like Bitcoin and Ethereum, but they can't
Yeah.
communicate with each other. And Cosmos was doing some really cool stuff. And it also for microtransactions, we know that Bitcoin and Ethereum
Yeah.
can get very expensive. But when you start looking at, let's say, Sentinel, for example, a decentralized VPN, lots and lots of tiny microtransactions, really
Yeah.
lots of them. You can't do that on Ethereum;
Hmm.
it's impossible. And so the Cosmos technology and the Cosmos SDK allowed these microtransactions and interoperability, and so that was
Yeah.
really cool stuff that fascinated me. And so, yeah, I guess I met Raoul in the Cosmos ecosystem, and then he knew Lu Chang from
Right.
Draper University. Um, and Karthik is a childhood friend of Raoul as well. And Karthik and Raoul have been in blockchain and crypto
Yeah.
since way back, like sort of mining Bitcoin back
Right.
in the
Right.
early days,
Yeah.
sort of thing. So I was the last one to come in 2017. I think Lu Chang had been exposed to Bitcoin since maybe 2015 because of Draper Uni, and Tim Draper was
Right.
a real sort of proponent of
Yeah.
Bitcoin back in the day. Yeah, so I learned a lot from these guys, and we seem to gel very well and want to
Yeah.
help teams together.
Well, for our listeners, for anybody who's maybe not directly familiar with Web3, crypto, they've heard these expressions, may have a kind of a broad understanding of what they mean. Um, can we maybe just level set on? I mean, it's called Web3 because it's being generally accepted as kind of the third wave of the internet. The first being more kind of online
Hmm.
brochures, the second being more kind
Yes,
of centralized or commerce driven
that's right.
and what have you, and then Web3 being this kind of decentralized, blockchain driven
Hmm.
internet. What is it that excites you about that model? And is your focus more on let's say the applications of blockchain than it is necessarily on the, let's say, the crypto side of the equation?
I think as an overarching theme,
Hmm.
decentralization is is very important
Yeah.
for humanity. I think we are seeing these massively centralized
Hmm.
oligopolies, whether it's big tech, big pharma, big finance, and they just get bigger and bigger and bigger and
Hmm.
more and more and more powerful. And you've got the antitrust laws in the States, but do they do enough? And we're getting to a point where, one or two companies own
Hmm.
everyone's data and they sell it, and they just have so much power and control. And I don't even think it's malicious intent from the onset. It's almost like how the incentives work with the private companies, or they become public companies and they have shareholders
Yeah.
and they have directors, and they just have to keep growing. And the entire financial system, it relies on constant growth and growth and growth. And so these big companies have to keep getting bigger and bigger and bigger and acquiring the smaller companies, competitors. Um, and so they just
Hmm.
become enormous, and everything becomes very, very centralized. And what I saw in Web3 is people can own their own data. They can transact peer to peer without a massive rent seeking third
Yeah.
party in the middle, whether it's a financial transaction, whether it's a data transaction. And I just see things going in a way that needs to be disrupted and more democratized
Yeah.
and decentralized. So as an overarching theme that I
Yeah.
agree with, yes. But it also unlocks a lot of technological
Hmm.
possibilities. Um, so, I mean, if we talk about one of our portfolio companies, let's talk about LucidDAO. LucidDAO is a lot of our companies, we call them companies, but they're actually DAOs. DAO stands for Decentralized Autonomous
Hmm.
Organization. And a DAO is more like a group, and governance is very distributed. Um, and they usually run on proof of stake networks where you hold a stake in the it's without
Yeah.
using the word company, you hold a
Yeah.
stake in the network, right? And that can be in the form of tokens, but then you can vote. And so major decisions from the DAO get proposed on chain, and then everyone who holds a stake in the
Yeah.
network can vote proportionate
Right.
to their stake. That's basically what a DAO is. Now, LucidDAO have created something really cool called Alter. That's ALTR
Okay.
.trade
Yeah.
is the website. And what they're doing is they're using NFT technology to basically put collectibles on chain. And so let's say you've got Well, this allows for multiple different applications. So let's say you've got a collectible
Yeah.
Ferrari, an old F40, and it's worth
Yeah.
4 million euros. It's a lot easier to find multiple buyers than one buyer. And you can actually generate a liquidity premium as well. So if you can fractionalize ownership of these extremely luxury, expensive collectibles, that's quite a novel
Right.
concept. Another thing is, imagine if you're a collector and you've got $10 million worth of collectible watches,
Yeah.
bespoke watches, and you want to release some of that liquidity. There is no bank in the world that has the expertise to value these watches. There's no one that's going to take it from you and say, yes, okay, we'll use this as collateral, it's worth X
Yeah.
amount, and we'll give you this liquidity. So what Alta allows is not only fractional ownership of collectibles, but also it allows a collector to put their collection or part of their collection up as collateral, and then you can borrow against that, and the liquidity is provided by the
Right.
community. And so it's a very democratized
So
model
the
of
community is
allowing.
purchasing tokens in that basically NFTs as a fractional ownership of that collectible. Yeah.
They can do, yeah, they can
Yeah.
own a percentage of that. There was actually that example I used, the Ferrari F40 of
Yeah.
4 million euros worth, that was sold on the
Wow.
platform already. Um, the funny thing is, it went
All
to
right.
one owner, so it didn't really prove the concept. But it was fractionalized, and you could have
Yeah.
bought a share in that.
The thinking being that
But
it's
there
an
is a
appreciating
mechanism.
asset, and so your tokens have the opportunity to appreciate. And okay.
Yes,
Yeah.
yeah. There's a big theme in Web3 right now. We call it
Yeah.
RWA, real world assets, and collectibles is certainly one of these. This is
Right.
an asset class, whether it's a collectible Rolex or a Ferrari or
Yeah.
a classic car. Um, this is an asset class, and they're actually going to go
Yeah.
into wine as well. So wine collections. So there's a network of oracles that are there that value these things. Like I said, a bank couldn't really do it; they don't
Yeah.
have the expertise. But with LucidDAO and Alta, there's a network of oracles. Monaco Legends Group is one
Right.
that springs to mind, and they all have to sort of review the items and value them, make sure that
Right.
they're authentic, because there's obviously a big
Yeah.
problem with fakes. But that's been mitigated by
Right.
this Oracle network.
That's it.
Yeah. So that's one application of blockchain that we think is very novel, and it just unlocks a lot of possibilities in that
Yeah.
particular asset class.
Yeah. I mean, it certainly seems, it's becoming more popular in commercial real estate, to tokenize,
Hmm.
and ultimately give that more for the purposes, I guess, of secondary market liquidity. So, with, as you say, the alternative asset class, it tends to be, or historically at least, pretty illiquid. You're investing for the long term, or medium to long term, let's say 5 to 7 years, or maybe longer. But tokenizing and some of the legislative changes that have happened around that, giving secondary markets the opportunity to take those tokens, and perhaps for investors who might not be able to traditionally invest in that asset class, being able to participate through those secondary market token exchanges, which
Hmm.
is, yeah, super
That's right.
interesting. Yeah.
That's something we're actually doing with
Right.
our second fund.
Okay.
So Fund One is a pretty
Yep.
normal venture capital fund. Raised $12 million,
Right.
44 companies. Where that fund's doing really well. Has some really
Yeah.
good projects in there. Lots of launches
Nice.
coming up this year. But Fund Two will be a slightly higher raise, so we're going to go for
Yeah.
$50 million. But the cool thing about this fund, it's one of the first in the world that
Right.
will be tokenized. And so, why would you want to tokenize a venture capital fund? Well, if you're an investor in the venture capital fund, your money is pretty much locked up, right? There aren't really redemptions. We
Yep.
can't just give you your money back because it's invested in companies who are
Yep.
building startups. They can't really give the money back because it's in their treasury, it's being used. So venture capital has
Mm-hmm.
always been illiquid. But imagine if you could tokenize the fund and there was a secondary market, and one of our directors, Lawrence Newhook, he's an absolute veteran in traditional finance, and he's
Hmm.
in this space now. And he's orchestrated a lot of this sort of tokenization of the funds. He has a fund platform in
Right.
Bermuda that we are on, and he's slowly
Yeah.
tokenizing a lot of these funds. He comes from the pension fund world. He's worked at Point 72, and he envisages a world where pension funds can simply rebalance their alternatives portfolios,
Hmm.
right? So let's say they're slightly up, and there's been markups because of subsequent round of financing in the portfolio. Maybe there's some that are liquid, but they can't just get a
Yeah.
distribution or a redemption. But they could sell their position based on all the information that is public at a premium on a
Yeah.
secondary market. And the cool thing is, it's not just a token that represents the economics in the fund. It would have everything coded into
Right.
the smart contracts. So all of the accredited investor
Yeah.
sort of, there's a lot of
Yeah.
there's a lot of regulation in private capital. So imagine if you could go on as an investor and you get whitelisted, you've done all your KYC, all your AML, you're an accredited
Yeah.
investor, you've proven that. Well, suddenly you can then now you're free to purchase all these tokens that match the criteria, whether it's jurisdictional, whether it's being an accredited investor in a
Yeah.
certain jurisdiction. All of that will be coded into the token, and you will only see the investments that you're eligible
Yeah.
to buy into. And so that is, if you look at traditional finance and how archaic it is with transfer agents and share slips and all of this stuff, it really is going to be
Yeah.
completely revolutionized with blockchain
Yeah.
and
It
tokens.
is. It's exciting. I mean, I think one of the observations I'd make, just having looked at this ourselves, is that the legislation, in the US, for example, the SEC, kind of keeping pace with the technological capabilities. I mean, in some respects, I see the companies that are capable of doing it just not either gaining as much traction as they should, because there's still an opaqueness around the legislation. And if the regulators could kind of keep pace with that, or be a little bit more open with
Mm,
it, the rate of change would be that much quicker. Uh, how do you find that as you
yeah,
look at kind of your investment landscape? Is that something you're seeing?
yeah. There's a big sort of phrase in our space, and that is regulation
Hmm.
follows innovation. There's like first
Yeah.
through the door gets shot. And the regulators are understandably slow to move because there is a hell
Yeah.
of a lot going on, and they are obviously conservative. They don't just want to roll out legislation at the,
Yeah.
the jerk of a knee, that could really affect things. Um, and we do tend to think in our industry that the SEC do lack transparency. They tend to go after people, and
Yeah.
everyone's scared of the SEC. Most startups in our sector are scared to be in
Yeah.
America, full stop. There are jurisdictions, if we use Switzerland for an example, and FINMA, much more transparent, much more willing to communicate, although they're a little slow. But you will have a better time as a startup incorporating a
Yeah.
foundation in Switzerland, trying to get FINMA regulated, than the SEC, who, according to a lot of the founders we work with, can be um, extremely difficult to deal with. They don't really give
Yeah.
much guidance. They won't really tell you what to
Yeah.
avoid until it's too late. And so they're ultimately scaring off a lot of talent. And the companies would rather be incorporated in, they move
Yeah.
around. Actually, what I've seen since 2018, Malta was a hot spot, and then that all became a little bit shady, and people didn't want to be there
Yeah.
because of bad reputation. And then there was the BVI, and then the BVI sort of clamped down because it became a little bit too easy, and a
Yeah.
few scams and things. Um, but it's a very
Yeah.
fast moving space. Singapore is
Right.
a good jurisdiction, very sort of digital asset friendly, and where we
Hmm.
are, Bermuda has a great reputation as the insurance
Right.
capital of the world, but they're also very
Mm.
digital asset friendly. The premier of Bermuda is sort of pro digital assets, and they have this new
Yeah.
DABA license, So Coinbase and Kraken are two of the largest exchanges in the world for digital assets, are setting up
Yeah.
in Bermuda under this license. Our asset management company, Arcanum Capital ISA, we're
Right.
domiciled in Bermuda, and Lawrence
Mm.
is in Bermuda, and we're sort of registered with the regulators. All the funds that we manage are all fully approved by the
Yeah.
regulators in Bermuda, and this gives institutional investors a lot of comfort, because we are regulated. They're looking at us, they know what we're doing, they
Yeah.
know where the money's going to and from, and nothing's going to disappear like it does in maybe places
Yeah.
like Panama or Cayman have the microscope on them, because there's a lot of
Yeah.
stuff that goes down there. So yeah, there's a lot of musical chairs when it comes to
Yeah.
geography in this space, because by nature it is just so decentralized, and you can launch a startup from
Yeah.
anywhere in the world now.
It is. It is crazy. I mean, I know Coinbase has been a pretty well publicized example of the challenges. I mean, that constant questioning of the regulators as to, well, how should they be operating? Actually, calling for regulation, and
Mm,
not getting the response it was expecting, and as a result, I guess,
that's
looking
right.
elsewhere, I know they looked at a number of different geographies for that. But it's interesting, and I wonder to what extent the movement of stories like FTX, Binance, etc., moving from the financial pages to the front
Mm.
pages, how that affects your view, maybe your LP's view of the space. Is it more challenging when you see? I mean, it is a lot. There's a lot of hype and perhaps misunderstanding of what's going on there, or what's gone on there, in the space. Is that how do you find that affecting your, let's say, ability to raise, or indeed questions from your existing LP base?
Yeah, FTX was a complete
Yeah.
mess, and I think that was due to the lacks of oversight
Hmm.
in the
Yeah.
Bahamas, where they were
Yeah.
domiciled. That they were letting these companies just start up there, and there wasn't really strong enough regulation, and or oversight. And when you're dealing with those amounts of money, you have to be heavily regulated and inspected, and make sure that you're
Yeah.
doing things properly. So that unwound, and that affected the entire industry, and has created
Yeah.
trust issues. Yeah. Um, I think a big catalyst for us now is the Bitcoin
Yeah.
and Ethereum ETFs, which have been approved and launched. And I think even the most conservative of family offices are starting to think we can't ignore this asset
Hmm.
class any longer. But before, it was very niche and a bit shady, and is this real? Is it a bubble? Is it going to disappear? Is it going to blow up? Now it really is becoming obvious
Yeah.
that it's here to stay. These are some of the best performing ETFs ever launched, and they're attracting a hell
Yeah.
of a lot of
Well, I
capital.
think BlackRock
Um,
said it was the
there's
fastest
questions
to
around,
a billion in history on the
yeah,
original
yeah,
Bitcoin ETF. Yeah, crazy.
yeah, and there's questions around, entire fiat currencies themselves,
Hmm.
even the US dollar. It's the world reserve currency, and there's questions around that with BRICS and people trying to, you know,
Yeah.
move away from the dollar
Yeah.
slowly but surely. And so, where do you park your value? How do you store value? There's
Yeah.
obviously gold, but when there's this thing that looks like digital gold, and it's performing better than gold, and it's easy to, custody and insure and transport and
Yeah.
move peer to peer, all of a sudden it becomes impossible to ignore, and
Yeah.
that's what Bitcoin is. Um, and then once you've taken the orange pill, as we call it, once you've
Yeah.
had your Bitcoin moment, that opens up all sorts of doors, because you realize that this is not just about currency. This is about the entire internet. This is about
Yeah.
decentralizing everything. And there are just so many
Mm.
possibilities.
Yeah. Well, I think that institutional backing, if you will, of the space is important. To I mean, it's not to. I mean, it's partly to legitimize it and make it more appealing to to the capital allocators that are backing most of what's happening in certainly venture capital and private equity. The companies that help the world move. Um, so I think that the ETFs, that's a big step forward, and
Hmm.
yeah, great to see that kind of as I say, legitimizing of the space. When you look at let's say the next 5 years or so, James, what's kind of most exciting to you about where this is either going, or things that you're seeing right now that are emerging as trends? Just kind of looking at it a little bit. How do you how would you characterize
Hmm.
that? What's exciting for you?
I do think that our
Mm.
job is going to get harder. I think that
Hmm.
regulation is coming, and I think it's going to be tough, and I think it will ultimately stifle a lot of the innovation that is happening. Um, and that said, I think there will be jurisdictions that offer this sort of sandbox environment and realize that not everyone is trying
Yeah.
to launder money or scam people, and that there is genuine, um, fantastic innovation happening. Um, so to answer your question, the good things that are happening, with all this capital coming into the sector, um, we should start to see a lot of products really go mainstream and start to disrupt the big
Yeah.
oligopolies. And that's what we're excited about. Um, so one of our portfolio companies, a company called Verse, is trying to
Right.
disrupt TikTok. So it's a short
Yeah.
video platform, but instead of, I mean, you've seen all the
Yeah.
TikTok controversy, right? This is being branded as a national security threat in places
Yeah.
like
The U.S.
even
Yeah.
America. I believe it's
Hmm.
banned in India. Um, Verse has, we're the only
Wow.
investor in Verse, has over 1 million downloads and I think over 500,000 daily active
Yeah.
users now. So it's very sticky,
Right.
it's very addictive. There's a whole lot of people in
Right.
India using it.
Yeah.
TikTok is not in India, so they've already got that entire market. It's hit number one in the UAE App Store twice now, I believe, and this is growing it's actually growing at the same pace
Wow.
as TikTok did at the beginning. And so what Verse is going to do is bridging the gap between Web 2 and Web 3. So there probably will be a
Right.
token involved, also a point system. But if you look at TikTok, if you're a content creator on TikTok, you
Hmm.
don't really get rewarded. The platform sells advertising space, and you can take this as
Yeah.
any social media platform
Hmm.
in existence.
Yeah.
You are the product. You know, you might get free things and you might get deals with brands as an influencer, but you're not getting anything from the platform. The platform are using you to bring people, and then
Yeah.
they're selling
Yeah.
advertising space. Whereas with these more democratized, decentralized social media platforms, all of the social graphs can be on chain. There can be point systems. There can be AI as well that can sort of track virality. You know, if something goes viral, you've created a trend. The platform actually has the ability to track
Yeah.
that and reward you and give you points. And so we're really excited about these platforms starting to be taken seriously by the mainstream. And actually, now is we will start to see
Hmm.
real disruption. So yeah, I think if we look 5 years ahead, it's been so niche until now. Although we feel like we've been building stuff since
Yeah.
2018, we don't have mass adoption yet. But I think the next 3 to 5 years, we will definitely start to see
Yeah.
true disruption. Whether it be if you look at Chrome and Safari, and the sort of monopoly they have on all the data and your
Yeah.
browsing history and everything. We have we have a browser in our portfolio
Right.
called Santa, because it gives you
Right.
gifts, but it actually
Yeah.
pays you to browse. So rather than Google selling advertising space, you get shown adverts if
Right.
you've got them switched on, and you'll get
Yeah.
paid in crypto
Wow.
for browsing. Um, Also, if you go and shop on Amazon through Santa, you actually get the Santa can strike a deal with Amazon, and that you can get cash back if you purchase things on Amazon
Yeah.
through Santa. There's lots and lots of novel possibilities, um, with decentralizing and democratizing all of this stuff from web browsers to social media, the financial system in
Yeah.
its entirety. peer-to-peer transaction, things like communication. You send someone a
Hmm.
message on WhatsApp, that's very
Yeah.
centralized. All of that data, again, it's all the same company, right? It's Meta. They've got Facebook, Instagram, WhatsApp.
Yeah.
All of this data, they own it, and it's unfathomable. So lots and lots of disruption to happen, and we should see that over the
Yeah.
next 3 to 5 years.
Yeah, it is. It is fascinating. I'm actually reading a book at the moment from Chris Dixon from A16Z called Read, Write, Own, and it's kind of about that shift, across from Web 1 to 2 to 3, and that really
Yeah,
describes what you're just describing there, which is, yeah, you own the data, you've got the ability to monetize it. In a
yeah,
diametrically opposed way to the FANG stocks right now, the way that they monetize it almost 100%. um, YouTube is probably one of the few exceptions, uh, but yeah, so
hmm
it will be fascinating to watch, and doubtless there are incentives there. I mean, where I guess the network design and the incentives in that network kind of affect the outcome, right? They drive the outcome, and so it will be interesting to see those incentives kind of come to the edges of the network, to the people who are interacting with it, and seeing what comes of that. Um, but content
hmm
obviously being a key driver. So, well, good luck with that. That sounds like an interesting one. So, Verse is the name of the company, is it? Yeah,
yeah. Verse,
VURSE.
VURSE.
Okay, we're going to check
Yeah,
that out. Um, Okay, well, just kind of we're coming into wrapping up here, James. How can people learn more about Arcanum Capital, and maybe connect with you if they'd like to know more about you guys, the portcos that you're investing in, and indeed this second fund that you've got?
yeah. So I guess
Hmm.
website's an obvious one. So
Okay,
arcanum.capital. That's
okay,
ARCANUM
great.
dot capital. Um, we're quite active on X,
Yep,
formerly known as Twitter. So the handle is simply Arcanum Capital. So
great.
x.com/Arcanum
Yep,
Capital. They're probably the main two. I'm on
yep,
LinkedIn. My inbox on LinkedIn is a bit of a black hole. I get so many messages. I have about 15,000
yeah.
connections on LinkedIn, and I just get so many messages that I
Becomes
don't even open
unusable.
it half the time.
Yeah,
Um,
but
yeah,
if they
yeah.
connect with you, you can
The victim of its
kind of
own
or
success,
follow you, at
actually.
least be passively aware of what you guys are doing. Yeah,
Yeah, yeah. X is good. We very often repost portfolio highlights. The website, we always keep the
yeah,
portfolio very updated. So if a new company comes in, it's on there, and then you can just click through and go
yeah,
through to their website. Um, if you'd like any information on Fund One or Fund Two, indeed, you can email info at
okay.
arcanum.capital. Um, that'll come through to me anyway. And we can send out, you could look at our maybe previous
Yeah,
reports. We're very, very passionate about
right.
reporting. So we catch up with every single portfolio company every quarter, and we put updates and plans for the next quarter. Really, really, really,
Yeah,
really hot on reporting. So you might want to
great.
view those. Yeah, and we've got data rooms with all
Yeah,
of that stuff in. Yeah. But I should say that we can only speak
yeah,
to accredited investors. So this is not open for retail investors. Like I say, we're regulated, and we have to do a lot of due
yeah,
diligence on our investors. So we only really deal with accredited and
yeah.
institutional
Perfect.
investors.
And in terms of your LP base, is it predominantly European? Is it European, US? What's the right?
It's
Okay.
global, really. We do have some high net worths. With Tim Draper, I
Yep.
mentioned through Draper University Ventures. We have Sandeep Nailwal, founder of Polygon.
Right.
He's one of our LPs,
Yep.
Polygon Ventures. Um, some high net worths that made a lot of money in the last sort of crypto cycle and wanted to diversify more into,
Yeah.
private markets, and lock that capital away, and let it grow over the bear market rather than holding liquid stuff that's just
Yeah.
going to get destroyed. Um, so Yeah, some high net worth. Tavis Digital kindly supported us. Their due diligence was exceptionally difficult to get through. With them, being with their pension money background, they asked a lot of questions, and we managed to satisfy their criteria. So that was good. So yeah, it really does vary. We do take LPs from the States. We have a feeder fund, so it's all set up for global capital really. Some European, some state, UAE, and some from India as well. With us having boots on the ground in India, we get a lot of the best deals from India, and that interests
A lot of
Indian investors.
family office
So
activity
it's
out
really
of India
global.
right now. Yeah.
Yeah, it's a big emerging economy, and what we saw back with Fund One is, there's a lot of talent coming out. Kids coming out of uni and wanting to be blockchain developers. They're actually studying, coding at university, and they can, create
Yeah.
blockchains, and you're not really seeing that as
Right.
much in the West. So it's a big
Yeah.
emerging economy. Yes.
Well, very good. Well, we wish you nothing but the best for Fund Two. It sounds like you've got some really interesting portcos in Fund One, and I'm sure we'll
Hmm.
continue to support those. James, it's been a pleasure chatting to you today. I'm glad we finally connected and could make this happen. But for today on the People of Private Capital podcast, James, thanks very much. I wish you the very best.
Yeah. Thanks very much for having me,
Great.
Ferdy. It was
Thanks,
great to
James.
talk.